can increase your chances of winning the Super 6 jackpot with a combo play. Remember, Super 6 numbers are from 1 to 28. Choose any 5 Super 6 numbers. That's a combo 5 for $69. Match any 5 of the 6 numbers and you will win the jackpot. Choose 7 Super 6 numbers for $21. Match any 6 of the 7 numbers and win the jackpot. There's more. Combo 8, where you purchase 8 Super 6 numbers for $84. Match any 6 of the 8 numbers and you will win the jackpot. There are also Combo 3 and Combo 4 Super 6 plays. Visit the NLA headquarters in Pauls Avenue or WhatsApp 495-6886 for more details. Super 6, bigger jackpots, more chances to win.
Good evening and welcome to this week's edition of Roundtable Talk. This evening we are pleased to join the conversation with regards to pension reform here in St. Vincent and the Grenadines. It's indeed an issue that is not only topical in St. Vincent and the Grenadines, but certainly in the rest of the region as well. With us for this conversation, this very important conversation, is the Director of the National Insurance Services, Mr. Stewart Haynes. Stewart, it's been a while, but you had promised to be here quite a while ago, but finally you're here. We're happy to welcome you. Welcome to Roundtable Talk.
All right, thank you, and I'm very, very happy to be here despite the delay in terms of being here. The timing is still very, very critical. This topic of social security matters to all. So it's really, the board's effort, management effort to really get the word about understanding social security, what we're going through to the public in St. Vincent and the wider Caribbean. And we have in terms of our membership base, even internationally in the diaspora, through our voluntary contributory program. So social security touches lives, not only locally, but regionally and internationally. So we're happy to share our story with the public.
Definitely, and we want to start that story at the beginning. Yeah, what is the NIS? Right. What is its purpose? What is the purpose of Social Security? How did you start and why? And when as well? Excellent.
So Social Security started in 1987. We replaced the National Provident Funds. And it's a more comprehensive sort of a program that provides, it's a replacement income program, meaning that for the workers of St. Vincent, prior to Social Security, if someone fell ill, death, retirement, there's no source of income. The Provident Fund paid what we call a lump sum, so that fund, that amount is exerted before death. So clearly it's not a protection for life. So the Social Security system was introduced in St. Vincent so that workers and their dependents can get that protection against financial loss as a result of illness, employment, injury, death, retirement, maternity, and that comprehensive benefit package. So it's a replacement income. So it's not only focused on income replacement, it's also focused on the economic development. So the program spans two, because the history of Social Security actually a combination of two sort of awards. The society, which means we caters for everyone. So we focus on universality, we focus on solidarity, and we focus on equity. And there's this protection element. So from the Social Security, what you have is the social insurance, which is NIS, that provides that safety net for workers. And that safety net promotes human dignity and human development. From a dignity standpoint is the replacement income. And currently we provide protection for over 52,000 Vincentian, almost more than 45% of the population. In 2022, under that sort of an arrangement, we paid over 85.4 million to 21,000 Vincentians under the program. And that is significant. And providing that protection also, what happened is that we stimulate the economy, because persons that receive that benefit would have to consume. So on the demand side of things, we drove the economy. Then also social security played a critical role in terms of economic development. We have an asset base about 467 million, and that as investment portfolio. And from that amount, we have approximately 267 in the local economy, and about 103 million in financial institutions, including banks and credit union. And those financial institutions then lend to their consumer. So that's also how we contribute towards the economic development. And also social security play a very important role with regards to funding major capital projects that contribute towards employment. So the human development aspect, and that's why our mandate expand beyond an income, sort of a replacement mandate, to a more human development mandate. Because we invest in economies, we invest in communities, and we invest in individuals. And if we look at our social development program, we put monies into housing, we put monies into health, we put monies into education, we put monies into poverty alleviation program. So social security is broader, NIS, than the income protection, but our sort of an invaluable contribution to socio-economic development. So it's very, very critical for our sort of country, St. Vincent and the Grenadines. They are very fundamental part.
You spoke about society, universality, and solidarity. Let's look at each of these individually, starting with society.
Right. So society means we cater for all. So we provide protection actually from cradle to grave, and even beyond that, because on birth, there's a maternity benefit. Whilst, as a child going to school, if that occurs among your parent, there's a survivor's protection there. When you start working, you get protection against sickness, employment injury, maternity, invalidity, so that aspect. And when you retire, what you receive in terms of your pension, and let us say that occur, your kids would also benefit. So that's why social security go from cradle to beyond. So that's the societal aspect. And that is why we focus not only on providing that income support to individual, but we also focus on developing the economy and the social fabric in which these workers exist. So you will find social security play a role in economic and social development, because rather than only the income protection, we broaden our mandate to provide that protection for the society. Right. And the universality aspect of it means that traditionally we cover the formal workers, right? But what we see now in terms of labor market development is that most new employments are really coming in the informal sectors and the self-employed, and these persons are uncovered. And if we look at the COVID-19 situation, it kind of gives us a glimpse in terms of the future, because persons that weren't protected by social insurance, which is NIS, and also social assistance, which is another leg of social security, were basically left in the cold. Because let us say self-employed lost a job as a result of COVID. There was no protection. So they had to rely on the government for that support. And that's why government pivoted or developed what we call the income support program, to provide that support to persons that suffer significant reduction in income and loss of income, right? If we look forward for those sort of a category of workers, and let us look at the seafarers, because we have a lot of Vincentians overseas that are sailing under the oil rig. And I think at some point was the second largest employer after the government. And we saw the impact of COVID-19 on that category of worker. The marginal propensity to save, let us say maybe low, because they weren't able to fall back on their savings to support. But let us look at retirement now. If that happens, those persons will not be protected because they're not covered under social insurance, neither the social assistance program. So therefore, you can see that without this social security protection, you're creating an avenue for poverty. And that's one of the principal purpose of social security, poverty alleviation, right? To provide that financial support to individuals. So that's why we are expanding our mandate to cover the self-employed and the informal, because we are vulnerable. And today's so-called secure workers, like the sailors, maybe tomorrow poor people, simply because if there is an incident that causes loss of income and there's no social protection, then they'll be left in the cold. And let us say at retirement they use their savings. If their life expectancy is higher than average, then they will exhaust that savings. That was the fundamental problem with the National Provident Fund. And that's why we had to replace not only St. Vincent through the Caribbean, NPF, for NIS, so that you can get this pension for lifetime. And the St. Vincent situation is real, because we have over 9,300 pensioners. And from that 9,300 pensioners, 7,000, about that, receive NIS as the only source of income in retirement. Retirement, typically, we would say, should be a three-legged stool. What you put aside for yourself, what your employer put aside for you, then what the NIS. In the context of St. Vincent, the majority of our pensioners only have a reliable source of social security. So that is how critical social security is in terms of to our Vincentians' retirement plan. And using regional statistics, the same, because the data I receive from Barbados, 21% of the workers are provided with occupational pension plan. In Jamaica, it's 18%. In Trinidad, 11%. And these are the biggest sort of Caribbean economies. So in St. Vincent, then all we could deduce that there's a smaller percentage being covered. So social security is the only leg in retirement. So that's the important role we play in these small economies as well.
Solidarity.
Solidarity now means for all, because we'd have from time to time a customer will tell me, okay, what if death occurs? What's in there for me? Right? So it's not about you only. It's about we providing this economic support to our society. Because let us say you contribute. The key is what we use our contributions for. We use our contribution, yes, to replace your income on time and in full. But we also use our contribution, for instance, invest in health. So we invest in a CT scan. Before we made that investment, a worker or their dependent had to travel for that service. But we make that available to Vincentian as part and parcel of the solidarity principle. One would also tell me if that occurred, they receive nothing other than the funeral grant if they have no dependent. We have persons who receive a pension after 3 years and are still receiving their pension. When we look at, run the calculation for the simple contributions you pay in over your work history, then we look at the pension you receive. Within 2 years, on average, most persons receive everything they put back in. So that is the solidarity principle. And the solidarity principle also lies from in 1990. One of our pensioners qualified for $1.50. And in 1994, when we did the actuarial valuation, we said, no, some dignity should go towards the Social Security program. And what we did, we introduced a minimum pension. And the minimum pension at that time was $40. Now the minimum pension is $70.
$40 weekly?
Weekly.
Okay.
And from the 9,300 pensioners that I spoke about, 1,300 about there were qualified upon time of retirement for less than $70 a week. So we had to top it up to $70. So all that is solidarity principle. So we are our brother's keepers. So that's the whole principle of Social Security. That's the solidarity element
Okay,
of it.
wonderful. Great start. So when we come back, we're going to talk about where we are now since we started in 1987. Remember, if you want to contribute to the program, you can do so by contacting us via Facebook, via YouTube, or our WhatsApp number, which is 493-5332. We'll be back in just a moment.
Thinking of winning the lotto jackpot? Well, there is an easy way. Combo Play. Choose 4 numbers from 1 to 36. That's a combo 4 at a cost of $64. Match any 4 of the 5 numbers and win the lotto jackpot. There's Combo 6, where you purchase 6 numbers for only $12. Match any 5 of the 6 lotto numbers and hit the jackpot. How about Combo 7? That's a purchase of 7 lotto numbers for $42. Match any 5 of the 7 numbers and you will win the jackpot. There are also Combo 3, Combo 8, and Combo 9 lotto plays. Visit the NLA headquarters in Pauls Avenue or WhatsApp 495-6886 for more details. Lotto, you have to be in it to win it. You can increase your chances of winning the Super 6 jackpot with a combo play. Remember, Super 6 numbers are from 1 to 28. Choose any 5 Super 6 numbers. That's a combo 5 for $69. Match any 5 of the 6 numbers and you will win the jackpot. Choose 7 Super 6 numbers for $21. Match any 6 of the 7 numbers and win the jackpot. There's more. Combo 8, where you purchase 8 Super 6 numbers for $84. Match any 6 of the 8 numbers and you will win the jackpot. There are also Combo 3 and Combo 4 Super 6 plays. Visit the NLA headquarters in Pauls Avenue or WhatsApp 495-6886 for more details. Super 6, bigger jackpots, more chances to win.
Welcome back. Our special guest on today's edition of Roundtable Talk is the Director of the NIS, Mr. Stewart Haynes. NIS is going to be 36 years this year. Where are we now? How far have we come in terms of our financial, actuarial? Where are we? What is our position?
Well, we are in a good place with regards to touching lives. So this is a mixed question. We are at a good place because currently we providing protection for 52,000 or so Vincentians, of which our pension base is about 9,300 and our contributory base is about 43,000. So that's a significant protection. So we have maintained our relevance, very important, by providing protection for more than 45%, going 50% of the population. So that's good. From an asset-based standpoint, our asset base is roughly 476 million. So we more than 20% of GDP. That is significant. So in terms of where we are now, what I will say, we are a significant, important social and financial institution because we are touching many lives. We have a very large asset base, of which 267 million is in the local economy. And also we have transformed a lot of lives. So just in 2022, we touched from a sickness benefit and short-term benefit, employment, injury, over 20,000 lives. If you could recall, as a result of the pandemic, what we broadened our income support and we provided the temporary unemployment benefit to over 1,200 Vincentian at a cost of 3 million. So we have touched lives. We also invested in the National Student Loan Company, and we have contributed to at least 500 plus Vincentian qualifying or attaining in terms of a postgrad or undergraduate degree.
Higher education.
So higher education. So we've done well on the social side. We've done well on the economic side in terms of our contribution, and we have done well with regards to meeting our promise, because Social Security is a promise to pay. So to date, we have met all of our obligations on time and in full. But Social Security play an enormous role in our society, and it has many moving parts. So we are at the point now where our total expenditure is growing much faster than our income, right? So we have money going out at a faster rate, because if we look at the expenditure, this is going out at a rate of 13%, and our income is coming in at a rate of 10%, right? So what it means that there's a somewhat financial imbalance, and there's an indication for reform. So that's where we are now. But we have a reserve to tap into so that we could supplement the gap between total expenditure and total income to meet our obligation, right? So it's a clear sign that there's a need for reform. But this is the design of Social Security, because at the end of the day, for instance, when we started in 1987, the number of years required for pension was 3, and we gradually increased. Now we had 13, 14 years. To be 13 years to be qualified for pension. So it will change.
Now it's 13 years at present to qualify.
Right,
Okay.
for full pension. But we provide what we call a partial pension. So even though you have 10 years of contribution, then you will get what we call a partial pension. So we are at a place now, and when these plans were designed, like for instance, St. Vincent had and still continue to have the lowest contribution rate in the region. So in 1987, in 1986, under the NPF, the rate was 10%. When we introduced a more comprehensive program, we dropped the rate from 10 to 5.5. We were the only country in the region to do that. St. Lucia started in 1979. They maintained their rate at 10%. St. Kitts started in 1978. Their rate remained 11%. Grenada started in 1983. Grenada rate was 9%. They gone to 11. Anguilla the same. So all these countries now have a contribution rate of 10%. But we took 3 decades to reach that 10%, because we were there before NIS, in under MPF. We reduced to 5.5. We increased to 6%, then to 8, then to 10. So we took 3 decades to be there, whilst other countries regionally were always there. So given those design on the contribution side and also on the benefit side, we're at a point now where we're talking about reforming to ensure, one, the system remains sustainable, we provide adequate sort of a benefit, the income, the contribution rate we charge is affordable, we contribute towards poverty alleviation, and importantly is that we ensure that there's equity between generations. Because NIS is somewhat like, I would say, a formalized Susuhan. For instance, I'm a contributor now. My mother is a pensioner. My daughter is in secondary school. So what we have to ensure is that we make parametric changes so that we don't make it expensive or very costly for our current and future generation to pay a higher price for the same benefit. So it's intergenerational equity. And this is that's a typical design in terms of the plan to make the changes. So that's where we are now. We've grown, we've touched and transformed many lives. We want to continue to do that because a critical component of any society, social security, and we now having the conversation, the social dialogue around pension reform and NIS.
What are some of the changes that we can anticipate, if you will?
Right. So what I can speak to, I can share sort of a typical experiences. And at the end of the day, we did our actuarial valuation. By law, we have to do our assessment of our fund every 3 years. The independent actuary will give us recommendations around improving the sustainability. So when we look at Social Security and St. Vincent design, we could look around, for instance, you get a pension because a promise to pay based on the number of years you contribute. So what you can do, you can increase the number of years you contribute. For instance, now, in 2014, we made a change, so we contribute in 13 now. It's essentially we're going to 15 years of contribution by 2028. All right? So that's one element. You also could change the reference wages. So currently we pay a pension percentage based on your wages, the best 5 out of your entire work history. One could say you could look at your whole career average and you determine your wage there. Then we design in sort of a front-end loaded. So after 15 years, for instance, you're entitled to 30%, then 1% thereafter. So it's a front-end loaded sort of a benefit. So what you can do, you can uniform the rate so that as you contribute 1 year, you're entitled to 1% and spread that across one work history. Another sort of an element you can look at in terms of the design is ages, is the age, retirement age. So currently our retirement age will eventually reach 65 in 2028, right? The current now is 63. So eventually we would reach 65. One can consider the change in rate as well. But I don't think that's likely for St. Vincent case because we haven't reached 65 as yet. We also allow persons to take early retirement, early pensions, and that is designed in our case because it's costing the plan now. But that is designed in our case because not all employers have aligned their retirement age with NIS pensionable age. So what you would have essentially is that if we only allow persons to get the pension at the pensionable age, it means persons who retire 60 may have to wait 3 years. And that kind of mangles our principle of poverty alleviation. So we had to keep it, we had to preserve that early age pension so that those persons could take the pension early, but as a reduction. So the adjustment factor is 6%. One can consider increasing that. So that's on the design side. On the finance side, you could think of increasing contribution rate. The contribution rate is now 10%, so you can think of increasing that. You also can think of the insurable wages. So we have a ceiling now where you pay at a maximum of 4,330. You could increase that, let us say, to 5,000. Right? That's another way. But that's two-edged because we'll get more income in the short term, but your benefit in the long term will be a function of that unless you make some changes to that. Then our coverage, the self-employed now is voluntary. One could change the law to make it mandatory because the reality in terms of the labor market dynamics...
But will you be able to manage that? ...is
that, well, managing it will be a challenge because that is what our regional colleagues are experiencing. However, the coverage would increase from mandatory coverage. And mandatory coverage also means that is from the solidarity principle, meaning that there's some opportunities for us to improve so we can make the design very relevant for the self-employed sectors. So these are the suite of things we can consider. I'm not at liberty now to talk about what exactly we recommend because that will be the decision of Parliament to determine that. But if you want a more sustainable system, these are some of the typical measures you would adopt.
So at present, the person who does not contribute can benefit from NIS?
Right. And presently, no. We, in 1997, we instituted what we call the non-contributory assistance pensions. And that was targeted mainly for banana farmers who contributed to building our economy but did not have a chance to contribute to Social Security. So you provide protection to that cohort, right? That's established in 1997. But that program is closed administratively. So that will run until the last person dies, basically. Then in 2008, there was the introduction of the Elderly Assistance Program. That was similar to the NAP, but there was no secondary benefit or survivors benefit from that. And that program is also closed. And that program also was targeted. It was a targeted program towards economically challenged sort of an older person. So someone currently won't be able, without contribution to NIS, will not be able to benefit from NIS. And as I mentioned earlier it's social protection. So we have the social insurance element, which is Social Security, currently recovering about 9,300 persons. Then there's the social assistance run by the government, and they currently cover about 2,600 sort of older persons.
Okay, I have a question for you. I'll give you that question, but we'll take a second break and then you can answer. Somebody wants to know, if we are in a good place, why hasn't there been any increase in our pension for the past 10 years or so? You'll answer that when we come back in just a moment.
Thinking of winning the lotto jackpot? Well, there is an easy way. Combo Play. Choose 4 numbers from 1 to 36. That's a combo 4 at a cost of $64. Match any 4 of the 5 numbers and win the lotto jackpot. There's Combo 6, where you purchase 6 numbers for only $12. Match any 5 of the 6 lotto numbers and hit the jackpot. How about Combo 7? That's a purchase of 7 lotto numbers for $42. Match any 5 of the 7 numbers and you will win the jackpot. There are also Combo 3, Combo 8, and Combo 9 lotto plays. Visit the NLA headquarters in Pauls Avenue or WhatsApp 495-6886 for more details. Lotto, you have to be in it to win it. You can increase your chances of winning the Super 6 jackpot with a combo play. Remember, Super 6 numbers are from 1 to 28. Choose any 5 Super 6 numbers. That's a combo 5 for $69. Match any 5 of the 6 numbers and you will win the jackpot. Choose 7 Super 6 numbers for $21. Match any 6 of the 7 numbers and win the jackpot. There's more. Combo 8, where you purchase 8 Super 6 numbers for $84. Match any 6 of the 8 numbers and you will win the jackpot. There are also Combo 3 and Combo 4 Super 6 plays. Visit the NLA headquarters in Pauls Avenue or WhatsApp 495-6886 for more details. Super 6, bigger jackpots, more chances to win.
Welcome back. Before we took our second break, there was a question for you, so I am assuming that you have that answer ready because you've indicated that it's one that you get all the time. So why hasn't there been any increase in pensions for the past 10 years or so?
Right, so excellent. So the good question, thank you. The last time we increased pension was in 2014 or so, right? I mentioned one of the objectives of Social Security is to ensure that we have adequate contribution and affordable benefit, and both sort of a conflict. So therefore, pension increase is a function of affordability. Being in a good place from the standpoint of the number of lives you touched. So I need to clarify what I meant by being in a good place, meaning that we've grown an asset to an asset base about 24% of GDP. We've grown in terms of where we're covering more than 45% of the population, but like any social security, we're facing some challenges, and that is why I mentioned that total expenditure are higher than total income, right? Which you will typically see in a defined benefit plan if timely reform not made. So as I mentioned before, because it has a bit of history to speak with, I mentioned before that the contribution rate in St. Vincent was lower, right? And lowered in 1987, and we took three decades to reach there. And we increased contribution rate in 1997 when we instituted the Employment Injury Program. We increased in 2008, and we increased in 2014. However, with regards to benefits now were increased in 1994, 1999, 2002, 2005, 2008, and 2014. So we have successive increases in benefit, right? After reviews now, you realize the rate of growth of benefit outpacing the rate of growth of contribution, especially because of longevity, right? So we have benefit growing exponentially, and it's really driven by the demographics, as I mentioned. And when we see that the number of contributors actually not growing as much, the issue of our economy, small, vulnerable, not growing as fast. So we have total expenditure outstripping. So what you have to do as an actuary is try to create that financial balance, because currently the plan is financially imbalanced, right? And you're making changes. So if you increase pension too fast, then it's a burden on the future generation. And the objective of any sort of a pension plan is to make sure, one, the benefits you pay are adequate, and based on the last actuarial valuation, we passed the adequacy test in terms of benefit adequacy, but we had affordability challenges. So if your actuarial assessment reveals that, what you're going to do is you're going to hold an increase in benefits and try to make adjustment to the contribution rate, right? So you do that benefit adequacy test. But the objective is that we want this system to be sustainable, and it's all about society. And as I mentioned, it's an intergenerational sort of a program. So if you increase benefit too fast and the contribution rate not increase, then what would happen? You're transferring a burden on generations to come. And I did speak to the whole generosity of the pension plan, because when we look at a simple calculation, within 2 years you get back all your contribution. It's by design generous, right? So we're trying to strike that sort of a financial balance. We want to ensure that the benefits we paid are dignified, so we're going to do the adequacy test. But we also want to ensure that the contribution rate is affordable by the current workers and also future workers. And because we had that financial imbalance, because as I say, continuously increasing the benefits, which, is what is promised, because one of the goals is to maintain the real value of the benefits. But at the same time, if you have a design issue, you will kind of try to make recommendation that you create that financial balance and avoid sort of creating inequity across generations. So that's the reason why there haven't been any increase in pensions in the last sort of 9-10 years or so. And we were advised independently by the actuary as well. And so every 3 years, we were doing the increase in the benefits. And as I said, the last one was 2014. And the increase in contribution rate was slower, despite that we had a very low contribution rate. So it's really trying to look at those moving parts and keeping that financial balance, because Social Security ought to be perpetual, And that is where we'll give sort of a recommendation to ensure that this plan is sustainable. But what we ensure is that what we promise, which is key, which is also very important, what you promised you received, with regards to you always get your benefit over 36 years, on time and in full, which is critical for us, meeting that golden promise, right? Which we focused on.
Okay. There's been some concerns about the fact that a public servant can become eligible for a pension that is higher than his or her final salary, up to 127% of that final salary, when a pension from both the NIS and one from the consolidated fund are combined. Are there going to be any efforts to resolve that?
Right. So there are conversations around in terms of reforming the public pension system. Okay, the public pension system comprises of NIS and the civil service pension plan. So a typical civil servant had the same entitlement to NIS as any workers, because NIS cover all workers. So under the NIS program, potentially one could qualify up to 60% of their insurable wages. Currently we're at 53. Under the civil service pension plan, for the typical civil servant, it's really a 5 different regime, because you have one for teachers, one for police, one for judges and so forth, legislators.
Okay.
So it's different regime. But the general regime, basically, for each year of service, you're entitled to 1.67%. So you could 2%. For each year of service, you're entitled to 2%. The maximum years you can work to be qualified is 33 and a third. So 2 times 33 gives you 67. So if you add this 67% and you add this 60%, is 127%. And that by design is very, very generous. This issue was in Grenada before, right? And I mentioned Grenada because they did some reform in 1983, and civil servants now were only entitled to the NIS. But that was challenged. I understand some legislative issue was challenged, and it was reinstated. But St. Lucia addressed the issue. Person civil servant in St. Lucia now only qualify for NIS. Montserrat and Anguilla have different modalities where you have a cap. So you look at how much you contribute under the civil service plan, how much you contribute under the NIS, then you cap it at 80%. But in actual terms, that 127% of your income on retirement is very generous. On a local scale, regional scale, international scale, and the World Bank has done studies, IMF has done studies indicating that this is unsustainable. I look at the numbers for the public service pension, and it moved from about 8.9 million in 2000, 2001, around there, till to 2021, it's about 49 point something. So the pension bill is growing. So that naturally is a fiscal challenge for government, and it's financed in terms of from the consolidated fund. So if you compare on a regional scale, it's generous. If you compare on an international scale, it's generous. I mean, IMF in their annual sort of Article 4 visit is a conversation we would always have in terms of how you reform the civil service pension system to make it sustainable. But it's a really matter that needs to be looked into. The minister in his budget presentation, because of Social Security we had to scan, the environment, mentioned that there are going to be some consideration to make some changes. But clearly, there will be a committee set up to basically deal with that. But it's really a concern. I'm speaking not as a director at NISA, but as a citizen and as a taxpayer, that we really have to see how we can come together to really make that system sort of more sustainable, because we'd have to pay for it at the end of the day. So it's important that we could work on designing pension systems that are sustainable for basically taxpayers. That's essentially. So our system, by design, is generous on local, regional, and international scales.
What about minimum wage workers? How are they impacted, or how will they be impacted?
Right. So those minimum wage workers, so the minimum wage now, well, you contribute based on those minimum wage. So in the case of NIS, when you make your necessary contributions, you retire, we'd work out in terms of the number of years you contribute and your wages. If when we calculate your pension, it falls below 70, then what we'll do, top it up to 70. So under the NIS, the minimum wage workers are somewhat protected, right? Because we provide that sort of a dignified pension amount by paying a minimum pension. And within the civil service, their pension plan is so designed that is a function of the number of years you contribute, as I say, up to a maximum of 33, and your final salary in that case. So that minimum wage person, if they're one in civil service, and the pensioner will get a pension based on what their final salary or the salary at retirement, the year before retirement. So that's how they determine that for the public service pension system. So,
okay. How is your classification of employees done?
Right. So we, based on the principle of equity, so for a social security standpoint, we really don't classify employee. But what we'll do for statistical purpose, we want to look at we could do sort of a statistical analysis by occupation type, or by economic sectors, or by private and public, just to see how we perform in relative to the economy. But from the standpoint of benefit, you paid what you basically entitled to.
Okay.
So that's how we only treat with categories for statistical analysis, but not for the determination of benefits.
Okay. We'll take a final break and come right back.
You can increase your chances of winning the Super 6 jackpots with a combo play. Remember, Super 6 numbers are from 1 to 28. Choose any 5 Super 6 numbers. That's a combo 5 for $69. Match any 5 of the 6 numbers and you will win the jackpots. Choose 7 Super 6 numbers for $21. Match any 6 of the 7 numbers and win the jackpots. There's more. Combo 8, where you purchase 8 Super 6 numbers for $84. Match any 6 of the 8 numbers and you will win the jackpot. There are also Combo 3 and Combo 4 Super 6 plays. Visit the NLA headquarters in Pauls Avenue or WhatsApp 495-6886 for more details. Super 6, bigger jackpots, more chances to win.
Welcome back, and we're going to start with a question. Someone wants to know why at retirement we continue to lose thousands of dollars and then we are told we were in the wrong bracket, and they also want to know why hasn't this been rectified.
Why at
Retirement, they lose thousands of dollars and are told they were in the wrong bracket.
Right. Well, that's not the case for NIS. I did a consultations in terms of around with the police, and the police officers have this challenge about some reclassification under the public service pension plan. I did brought it to the attention of because it's outside my remit, but in terms of information sharing, I brought it to the attention of the CPO, because and the accountant general will treat with it. They are aware of it, and it's happened both ways based on the information. It could be upon retirement, it could be some adjustment, or there could be some overpayment. So it's balanced. But I was advised that they will try to address that issue, which I think is an issue really should be addressed, because retirement, you should basically get a good idea in terms of what you should receive. And I would follow up with regards to the CPO, with regards to how we treat with that among certain categories of workers. But I could recall that question came up in terms of when I was doing the consultations with the police. But it's important that it is addressed. So I said that I would use my office to have a conversation or to bring it to the attention of the chief personnel officer, and we see how we can, at least provide, some guidance into that and make the adjustment, because it's something that they are looking into, and it's something that they are concerned about.
So obviously there's some sort of error somewhere in the system, but why should the person lose?
Right. I can't speak to lose or winning, but I was advised, I was informed
that it balances out?
That is not the matter losing, it's just making an adjustment. But clearly I can't speak to that because I don't have the information. The matter was raised. I promised the officers that I would bring it to the attention of the relevant personnel, which I did in terms of from the CPO, and I would also discuss it with the AGs because it's part of the consultation process, and in terms of this social dialogue involve receiving information and helping our sort of a customer base. So it's something that I've brought to the attention of the CPO, hopefully to be addressed.
Talk a little bit about that initiative, the consultation process that's happening now.
Right. So the consultation process, to me, is very critical because I spoke to the issue of social security being society and protection. And there should not be any changes. The ideal way in terms of making reform measures is to consult the public, having this social dialogue, hearing views. And I've been enjoying, we started this journey since September last year. So we've consulted with the government and head of unions. We dealt with the different unions, the teachers' union. We have conversation with them, companies. 2 Fridays ago, I had a conversation with my pensioners. I am owning the pensioners. And, it was very refreshing, very engaging. Some good issues, came up. And also during the consultation process now, you really receive information in terms of persons' perspectives of NIS and also of the public sector pension program, so that you're able to document these with the view of serving our customers better. So that is going very well. We intend to reach out to other sectors of workers. We are open to receiving invitation from companies. I believe we have about 3 or 4 sort of a consultation to do at private companies, which is encouraging. And we are also planning to go to the Leeward, Windward, the Grenadines in terms of selling social security reform, informing, enlightening persons about NIS and reform, and more importantly, hearing views and opinions and ideas. Because in the process, we have received some very positive, some very good ideas that some are implementable. And also you would get feedback that cause you to think about the changes to be made. And that is encouraging. We have to encourage that debate across our society.
So how is the whole issue of life expectancy affecting the operations or impacting on what the reform would look like eventually?
Okay, excellent. One of the major driver of the increase in cost of NIS is because of increased life expectancy. That's the major driver of our cost increase. So that is one of the major factors that really causing or driving this reform initiative. And when we look at the projection of St. Vincent population, 60 years out, the St. Vincent population will be declining. And also it will be aging, population aging. So what you would have is a larger proportion of persons 65 and over than you have those between 15 and 64 and 0 and 14. So we are transitioning rapidly into an aging population, and that is not only specific to St. Vincent, that's true Latin American and the Caribbean. So that is one of the principal drivers, of course. And what we're seeing too is that the number of pensioners are growing. I mean, I mentioned it's 9,363. Last year it was about 9,100. When we started in 2000, I think the number of pensioners grew almost 12-fold. So we're seeing that, and the number of contributors, because the cost of any social security, you take the pensioners, number of pensioners over number of contributors. So the number of pensioners are growing, number of contributors, in the long run would decline. And once contributors decline and pension increase, then the costs increase, right? So that challenge now is basically at the driver of us even increasing retirement age in 2014 from 60 to 65, but we do it over a very long period, 15 years. So we will take up until 2028 to get to 65. But because life expectancy is increasing, it causes us now to drive the pensionable age. And you have some countries that have what we call automatic pensionable age. So that if life expectancy increases by X amount, then the pensionable age will go up. Actually, the last report from the IMF indicated that we should sort of adapt that, because that is what I say best practice with regards to designing the benefit package for defined benefit program. And these programs, defined benefit now, are only common among the public sector. When I look at the statistics in terms of the companies with these defined benefit, meaning based on the scheme's rule, you'll get paid based on the number of years you work and your wages. So your benefits are defined in rule, just as how your NIS is defined by law, as opposed to defined contribution, where your contribution, how much you pay into the system, is defined. So we have more private companies now moving away from defined benefit into defined contribution. Scotiabank, for instance, locally did that. Couriers made that change because the cost of a defined benefit plan, like what NIS operates, what the public service pensions operate, are very costly. And the costs are growing significantly because of population aging. So you'll find in the States a lot of companies now move away from defined benefit plan to defined contribution plan. One of the reasons is to mitigate or avoid that longevity risk. So the longevity risk is where life expectancy is increasing. So it's a global issue. And I'm seeing now the more developed countries are trying to resolve this by softening the immigration policies. It's so easy now for professionals to go into Canada or to the US because they are suffering population aging, where people living longer and fertility rate, number of births are declining. Similar situation with St. Vincent. So they try to address that by practicing soft immigration policies. So you encourage law professionals in, so to address the sort of a workers deficit, right? But they will do that at our expense, because naturally we're losing, because the persons living longer, the fertility rate declining, and migration increasing. So what it causes in the region, Latin America and the Caribbean, is that our work sort of force will decline, the youthful population will decline as people migrate.
Okay.
So it's a real issue for us,
Wow.
structural issue for us.
You know, we are almost out of time. We are out of time, really.
Yes.
We didn't even get to talk about the whole question of migratory workers. We didn't get to talk about the importance of contributing to the service, the system. So you know that you'll have to come back at some point in time. But before I go, I'm going to ask this question. Word on the street is that the NIS is in financial trouble.
Right.
Can you add some light to that?
Right. In terms of financial trouble, so the last actuarial valuation indicated that NIS is unsustainable in the long term. Right? In the short term, we can meet our obligations. And this is typical for Social Security across the region. So St. Vincent's situation no different from Grenada, no different from Barbados, because these are defined benefit programs that are designed and intend to change. Antigua, all the social security systems in the region, CARICOM, would have a period where they have to do reform. You have the Barbados situation. The Grenada Prime Minister in the last budget address announced that the rate to increase. Trinidad also did some reform. St. Kitts. So countries will do reform. So St. Vincent is a place now where reform is required, right? Because that is how the system designed. So currently we can meet our obligation. In the long term, we'll be challenged if we don't make any changes to contribution rate and benefit provisions. But NIS at this point could meet its obligation in time and in full over the short term. So yes, in terms of their need for reform, urgent reform to address the long-term sustainability issue, right? But with regards to being able to meet its obligation, I mean, we have an asset base of about 476 million. Yes, our total expenditure exceeded our total income in 2021. But the plan is designed that you partially fund it so that you'll use your reserve now to help you cushion until you make the changes. So these are typically designed and what I say sort of a financial pathways for defined benefit social security system. So yes, we are at a point based on the last actuarial valuation where we need to reform, all right? But can we pay our bills? Yes, we can pay our bills over the short term. In terms of, as I say, the indicator we would look at from an actuarial, look at how much you have in reserve and divide that by your expenditure. We have about sort of 5 years in reserve to cover. When we look at another indicator you look at is your fund exhaustion rate in terms of when your fund will be depleted. We're looking at our fund being depleted in 2034 if there are no changes. And just to bring regional context to this, we have an assessment was done in 2020 where we look at the actuarial valuations for the 16 regional social security. 5 schemes funds will exhaust in 2020s, which is this decade. Then we have 5 will go 2030s, including St. Vincent. We have 2 will go 2040s. We had 3 will go in the 2050s, and those are the 3 that already implemented their reform before 2020. And we had 1 that go in 2016, which is BVI, and BVI case is somewhat different than the sort of other cases. So these are financial indicators that, you know, different social security would have to manage and look at. So where St. Vincent is no different than where Grenada or Barbados start. It's a social security system. It's a solidarity system that deals with contribution and benefit payout, and you make changes along the way. Okay. So there's time for us to make changes.
Great. That's a perfect note on which to end this evening's edition of Roundtable Talk. Thank you so very much, Director of the NIS, Stewart Haynes, for being our special guest this evening. Until next Wednesday, thank you for viewing, thank you for contributing. Have a pleasant Wednesday evening. Goodbye.